Pound USD. Okay, pound dollar. So let's see what we're looking at. I was looking at a short position, and this actually would have filled perfectly. Wow. If I would have set an entry up here, which I did not do. So I drew this out, but missed it. So it's all good. But you can just see I drew this area of liquidity out. You can price kind of held above it, and then retested, and then you have this huge retest right through it, pulled back, and then this massive bearish engulfing candle. So like if you take this, if you just tighten this up, I literally drew it perfect. It just happened sooner than I thought. So the lines matched up perfect. That was the original one. Look, so got pretty I would say lucky with that. I just a little bit of skill. Obviously I've been doing this for a while here, but literally drew it out perfect. So now it's broken this area here, so now we can look for another position. I think the downside is still solid, so that's nice. Price is way below this 4-hour moving average still, so that's good. You're seeing some wicks in this area, but it is hitting a bottom. So actually guys, this is perfect. So what I'm going to do, because this was the original zone here, so you can see price coming down and hitting this liquidity zone, coming back up, getting rejected. This candle broke it, and but originally, like, what happens here is this was the original zone overall. So you can see this price came down. We'll base it on this. Sorry to be so confusing. So you see price comes down to this zone, huge rejection right here. Look at this massive wick, just completely rejects this entire area. Then finally this candle breaks into this area, and what it does is it pushes this zone down to here. So now you still have this huge wick down to this area, but now this zone is shrunk because it used to be up here, now it's down to here. So what will probably happen again is price is still within these huge wicks. Price is going to reject it, let's say this area or a little bit higher, and then hammer this zone again and push it down to like there, and then finally it's going to bust through this entire zone and make its way down. So this also kind of correlates in some ways with pound kiwi. So like I do see pound kiwi eventually switching directions and heading bearish, down. I guess it'll be a long time before you can actually really consider it bearish, but so with pound USD also kind of coming down now, it's definitely not bearish yet by any means. It's still way above this moving average, but I did see the dollar pushing up quite a bit, so that is going to be a factor. I'm gonna look for a short entry on this. Might as well just keep it going. Again, you are counter trend trading because price is way above this moving average on the daily, but it is below on the 4-hour, and you can see it is having issues going higher, so I like that. You got 47 minutes left on this 4-hour candle to close. I would probably wait for that, but this is a good sign so far. You got what was once a liquidity up zone up here. You can see price came up, totally rejected, big bearish candle down, tried again here with this huge wick through it, and then a nice bearish candle knocking us down into this new liquidity zone. So basically everything that happened right here, price tried to repeat here, right? It tried to come back up to this zone, but now it's getting stuck at this one. So the liquidity zones are moving lower and lower, so that's a good sign. And then the next step is to break through this. So because originally price would have been up here, like I said, on the daily time frame that I showed you guys, and then price broke through and now pushed this zone even lower. So we're looking for it to push it again. I would say it would be pretty good to take a short position at the close of this candle, as long as it closes the way it is right now. Let's see on 1 hour. So price is retesting this 1-hour moving average, which is nice, and it is below it, so that is a good sign. You get this bearish engulfing candle out of this zone. Again, this is only a 1-hour time frame, so it's not super significant, but the fact that price hit this zone, pulled back, bearish engulfing, price is below this 1-hour moving average, it wicked here, is about to wick here. It is a very good sign. If you wanted to wait for more confirmation on a short position, if you didn't want to take it now, you wanted more confirmation, let price break this area here. This is a 30-minute time frame, so if price, you can see these candles are respecting this moving average. They're sitting on top of it, they're wicking through it. So on the 30-minute, so the smaller time frame than the 1 hour, it is showing some bull momentum. So you can also see you got from this area, you got higher highs, higher lows. So there is bullish momentum on this 30-minute time frame. So I do think you'd be okay to short it, but it's not guaranteed, and you could wait for more momentum in your favor if you just wait for price to break this zone, close below this 30-minute moving average, and then obviously it would be way below this 1 hour moving average, and it would be below this zone here, which has been a bit of a liquidity zone here. You can see it's rejected, 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 broke, and now it's sitting on top. So I mean, I think you're okay. You got a lower low versus you got a lower high here versus here. So there's a little bit of conflicting data, but I would still say it's mostly to the downside, and you're good as long as this 4 hour candle closes with some heavy wick action here, which seems to be you know. And if you wanted to just be on the safe side, just extend your stop. If you're going to use a stop loss, you can always just extend it. I mean, that kind of devalues your risk to reward a lot here, but I mean, it's still a 3, so I think it's still decent. Depends on what you prefer for, you know, risk to reward, and what your trading criteria goes by, and principles. But yeah, do you think it's a decent short? I think it's a decent short now. I think for me to personally take this, I would just wait. I would wait for it to break this zone here. And I mean, I might check on this and when this candle closes. New York opens in about 1 hour and 15 minutes, so I would probably wait for that too. Actually, wait about 2 hours and just see what this looks like. If there's a lot of momentum through here on the, you know, New York Open, then I'll probably just wait it out and just let it die off. But I am pretty confident in this because price is way below this 4 hour moving average, which is nice, and you got some good bearish candles from this zone, and then you got this new liquidity zone, which should protect you. And then as long as you just, if we wait for this candle to close, this is my thought, if you wait for this candle to close, keep your stop above this liquidity area, and then just let price break this zone to the downside, especially on this 30-minute here. You can just see the temper, like on a 30-minute time frame. If this is all you had, you'd be like, you wouldn't short this, because you can see it's just lots of bullish structure, bullish momentum. You know, you can see price rejected this zone, then broke it. Now it's sitting on top. You got a big bullish engulfing candle on the 30-minute, so you wouldn't short this yet if all you had to go off was the 30-minute time frame. So again, wait for this to die off. Let price crack this area to the downside. You can actually see there's a whole level, and price loves whole levels. So if price loves whole levels, so do I. So here's your 127 area. Let price break that. Let price break below that on the 30-minute here. Oh, my mouse just froze. Bear with me. Oh, there we go. Let price break this level and close below it, and then I think you're good to go. So I'm actually going to set an alert here if TradingView lets me. Nope, they're still doing maintenance. Okay, I don't know how I'm using TradingView, but they won't let the maintenance work. I don't know, must be a server thing. But so this is what I'm looking for. Yeah, let price break this 127 area, and then it's below on the 30-minute, it's below on the 1 hour, it's below on the 4 hour. So I mean, it's not below on the daily, but I don't think the daily overall is bearish yet. So that's okay by me. So let price break that 127, and then hopefully it pushes this zone down more and more and more, and we can, you know, shrink this down to like here, let's say, if it gets hammered, and then look for, you know, more entries after that. This is still the monthly range, guys, so it's about 550 pips. If this was our monthly high, which actually it's a little bit lower here. Hold on, I gotta tidy these up a bit. We can move this down to 128.5. 128.5. 123 is actually our monthly low now, so that's good to know. So this would be our position here, which lines up with this nice area here. And so even if pound dollar here is still very bullish, ideally this is going to be the zone it retests anyways, right at 123. So this is actually just our monthly range here of about 550 pips. So if 128.5, which is this candle here, which 128.5 is a little bit higher, it actually only hit 128.41, so about 9 pips less, but I just like to round up for this to figure out my monthly parameters. But so 128.5 is the high for the month. If this moves 550 pips like it normally does, that's putting us at 123. So I mean, this is within range. If price rejects this zone, which it appears to be doing on the daily, then I mean, we're probably good to go to short this. And like right now you're looking at a 10 risk to reward. So if you wanted to jump on this now, I mean, you could, like, but again, the more conservative position would be for price to, wow, it's already kind of doing it. Look at that as we speak. Completely rejecting, closing with 8 minutes left, this 30-minute candle. So I would wait for price to break 127, and then you're good to enter. And I mean, you could even, what you could do is if price breaks 127, this could be your trade here. So you literally just go like this. Let's say price breaks below 127 and holds on a 30-minute. You can shrink this, stop if you wanted to. You don't have to. I mean, you could surely just keep it above here to be extra safe, but I think if price breaks 127, and if this 4-hour candle closes like this, then I mean, you still got 38 minutes left, but if it closes like this, then you'd probably be good to go to enter this trade just like this. And you're looking at a 11 to 12 risk to reward. So that's my type of risk to reward. I like that a lot. I like when there's a lot of confluence, so all the time frames line up. You got good price action, everything. The more confluence, the better. So you make better trades. And then when you factor in just high risk or like high reward to risk, so like double digits, I mean, that's how you build a really good trading career that's long term and very profitable. So yeah, I think that is the goal. So I gotta watch this because I can't set an alert apparently. So I'll check back in probably New York Open about an hour and a half from now. I'll check this again, but I think you would be good to enter it now or when it breaks 127 and just target the full monthly range of 123. I think I'd be pretty happy with that, and I think you would too. So that is pound USD.